Hello, and welcome to another episode of the Market Pulse series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we are having another episode of the Market Pulse where we are discussing the key market moving events. I know what you are all expecting. It's news about NVIDIA company, which basically reported earnings. That is for the fourth quarter of last year, last night. And this has had the biggest impact in the markets today. So we'll be trying to analyze that, understand how it has impacted various asset classes, and also do some technical analysis to understand where the markets might be headed next. So once you join in, kindly say hi in the live comment section, and this will confirm that everything is working just fine. So at the same time, I would like to begin with a disclaimer. So you should know that whenever you have these sessions, they never represent any form of investment advice, neither are they a trading recommendation. So you should always do your own research, analysis, and make your own conclusions, as well as practice proper risk management. So in today's session, we'll be starting with the economic calendar, see the events that have happened over the day, events that we'll be expecting over tomorrow, as we approach the end of the week. So hello, Owen. Hello, Charles. Hello, Shmi. I'm assuming that's the pronunciation for the name. So let's get things started. So first things first, we know that the dollar index has made a complete U-turn after having quite a negative start of the day. So in the morning hours, we had the dollar index being really weak. And after the opening of the market, there was a big sell-off in the dollar index. But then later on, it has erased all the losses it had made. So what we have seen is a complete reversal. And now the dollar index is about to close at a much higher price than it opened, which is evidence of how much stronger the dollar is, especially considering the Fed meeting minutes that were released at 9 p.m. yesterday. So from the Fed meeting minutes, there was some key highlights, basically indicating that the Fed is very concerned about potential changes in monetary policy, and this is because inflation has remained significantly high. So I'll be looking at that and try to understand what to expect going forward. So let me just take a second and share the screen. Nice. So I'm hoping that everyone can see this. So just give me a second. So as you can see from the top market highlights is one US stocks rally. The S&P 500 topped a fresh record high. The Nasdaq added more than 2%, and the Dow Jones jumped about 220 points after NVIDIA's results topped forecast. NVIDIA shares gained more than 15% as the company reported record revenue and issued upbeat guidance amid robust demand, suggesting the AI fuel rally will continue. Existing home sales in the US also rebound. Oil holds firm after a smaller than expected storage build. US private sector growth slows in February. Then Canada retail sales set to fall in January. US initial jobless claims fall to 5-week low, and ECB sees talk of rate cuts as premature coming in from the ECB meeting minutes. So those are the key highlights, but what I really want us to focus on is quite a number of things. So I'll be starting with US bond yields. So as we all know, there's a very strong correlation between bond yields and interest rates. So whenever interest rates move to the upper side, then bond yields also tend to increase. So what we are seeing from the list of bonds issued by the US Treasury are one, the short-term short-term treasuries are returning much higher than the long-term ones. For instance, if you look at the 1-month treasury, it's yielding 5.398%, 2-month 5.41, 3-month 5.403, and 4-month 5.4%. Looking at 6-month, it's 5.351, and 1 year 5.015%. So this is quite a reasonable increase in bond yields compared to 3 years ago during COVID. And now when you move further downwards and you look at longer term bonds, you'll notice that the 10-year bond is yielding 4.335%, 20-year 4.591, and 30-year 4.472. So what this indicates is a trend where yields have been increasing. So if at this moment you buy a US Treasury, then you're bound to benefit from some good yield and some good valuation for your bond. And as a result, it's attracting a lot of capital globally. So there is a lot of investors that are buying dollars and then using dollars to buy bonds. And this is a tightening cycle leading to more money ending up in US Treasury. And as a result, creating a very strong dollar demand. And as a result, leading to a very strong dollar. So seeing the yields resuming this bullish trajectory, then it means that the dollar is expected to continue strengthening. So marrying this information with what we saw with the Fed meeting minutes, there was a key highlight on CNBC, basically saying that Fed officials expressed caution about lowering rates too quickly at the last meeting, and this was from the minutes that were released last night. So a key highlight, there's quite a number of quotations here. So most participants noted the risks of moving too quickly to ease the stance of policy and emphasized the importance of carefully assessing incoming data in judging whether inflation is moving down sustainably to 2%, the minutes stated. So another set of quotations here. In discussing the policy outlook, participants judged that the policy rate was likely at its peak for this tightening cycle, the minutes stated. But participants generally noted that they did not expect it would be appropriate to reduce the target range for the federal funds rate until they had gained greater confidence that inflation was moving sustainably towards 2%. So it's basically the Fed members saying that they are not looking to continue increasing interest rates. They are satisfied with the current level, which is a range between 5.25% and 5.50%. So at the same time, when it comes to considering cutting interest rates, the Fed members are not very confident because inflation is not behaving as expected. So the next question that we have to focus on is on US inflation. And try to understand what is the key trend that is leading to this analysis from the Fed members. So looking at US inflation, I'll try and jump over to 5 years. You notice that the first time this inflation moved above 3% was somewhere in the third quarter of 2021. So since then, the inflation had been moving up, got to a peak of 9.1%, then started dropping downwards. And when you check the data for the last 1 year, then you'd notice that we have never had inflation report coming in lower than 3%. So in the last 1 year, we have had the highest of 6%, the lowest being 3%, a resurgence up to 3.7% for 2 consecutive months. We dropped back to 3.1%, up 3.4%, and down 3.1%, meaning that inflation has been pretty sticky above 3%. And the Fed is having a lot of challenges getting this back to 2%. So that extra 1.1% that the Fed needs to see happening in the economy is not happening as a result of a very strong US economy. And with this trend, basically means that inflation is risking to get into a zone we describe as stagflation. And stagflation is basically inflation that is very sticky, that holds on for a long time, leading an economy into a recession. So that's the key concern that Fed members are very concerned about. So knowing what we know, and now looking at the economic calendar, we will notice that there is quite a number of things that have changed over this week. And one of them is from the S&P Global flash manufacturing as well as services PMI. So the data was released at 5:45 p.m. earlier today, and this was both flash manufacturing as well as flash services PMI. So for manufacturing in the US, it moved from a previous number of 50.7 to 51.5, basically indicating that manufacturing conditions in the US are improving. So on the other hand, when you look at services, they moved from 52.5 down to 51.3. So this clearly indicates that manufacturing conditions are improving. And remember, when manufacturing conditions are improving, it basically means that there's more production that is expected in the near term. There's more employment or job creation that is expected in the near term. And this is not consistent with the Fed's expectations. The Fed has been hiking interest rates in a goal to try and reduce economic production, slow down manufacturing, and as a result, lead to higher unemployment, which would lead to inflation dropping back towards the 2% target. But now that this is becoming further more and more difficult, now combining with home sales, which are increasing now from 3.8 million in the previous month to 4 million in the month of January, then it becomes quite a hard task to achieve a 2% inflation target. So looking at earlier data, also including the unemployment claims, we saw the unemployment claims dropping to 201K, and this was a 5-week low. So if you check, I will try and use a line here. Notice that now we are seeing, it's a 4-week low. So what we are seeing is unemployment claims really going down. So remember, when you talk about unemployment claims, these are the number of people who just signed up for unemployment insurance in the last 1 week. And what we are seeing here is the number reducing, basically meaning that there is less people claiming for unemployment insurance because the economy is strong. So when the economy is really bad, what you normally experience is the number of unemployment claims rising to record highs. So just to give you a perspective, if we take a step back and we look at the pre-COVID period, you notice that there was a big spike in the number of people who claimed for unemployment insurance during the period around March 2020, when the stock market had a quick crash and a lot of businesses were closed down. So immediately after we got to this extreme, then this kept on improving. And this was as the US economy resumed reopening bit by bit, sector by sector. So now seeing this kind of trend happening today without COVID basically means that the economy is really strong, and this tends to be inflationary, which is against what the Fed is expecting. So what this means is that now, naturally, we should be expecting to see the US dollar strengthening against other currencies. And if the US dollar continues strengthening against other currencies, then it presents an opportunity for us as traders to take advantage of these movements that happen from these movements. So now looking at our charts and comparing with what we had analyzed in the morning. I remember we covered some of this content in the morning, and this was during the market snapshots. So I'm trying to get a full screen here so that you guys can get a better view. So now that we know the dollar is really strong, it has made an impressive recovery. Now we can compare with what happened with the major currencies. So in the morning, we had seen these currencies making a strong move against the dollar, but then the dollar resumed strength. So for currencies such as USD JPY, then in this case, we expect to see a breakout, in this case towards the upper side. So remember, these pairs were trading in a triangle. For instance, USD JPY was in this triangle. It has had a breakout to the upper side and is now about to hit a multi-year high of 150.866. And there's a potential that we could be seeing some further upside. So this creates opportunity for trades that tend to go long. And the previous high is still very nearby, around 151.878. So for anyone who is considering, let's say, going long for the USD JPY pair, then you should know that there is a nice resistance around 151.878. But also, you should be very concerned that the last two times that the USD JPY got to these levels, it changed direction strongly as a result of the intervention by the Bank of Japan. So it happened here, and this was on the 21st of October 2021. Then it happened here. This was around the 14th of November last year, and now we are approaching the same area again. So we don't know whether the Bank of Japan will be intervening, but there's a good chance to be concerned about the market getting to the same level. So as for Euro USD, after the big momentum upwards, we have seen a strong rejection of this area, and the market erasing all the earlier gains, and now it seems like the dollar strength is the dominant market driving factor. So a potential continuation of this momentum could lead towards the previous low around 1.07 So as for the pound USD, a very strong momentum early in the day was met with a very strong selling pressure, and what we are seeing here is some good support playing out. So when the market go to this area, you can see the strong bounce that happened. So you might have to wait until the market meets yet another resistance or support before we identify another opportunity. So as for now, it seems like the market found some strong support here and could be headed here towards the end of the day, where the pound is also reasonably strong in the markets. So as for USD CAD, the dollar was pretty weak, approached this area but didn't quite get to the target and bounced quite strongly. And now with the dollar strength resuming, the new target becomes the previous resistance, and that's yesterday's high. So I expect to see a continuation along these lines. So as for gold, I remember covering this. So on the forward chart, we saw gold early in the morning entering back into the trend line, though it did not hold for longer. So on the 1 hour chart, it basically maintained this trajectory of these previous two highs. But then once the dollar strengthened, it changed direction. And now we have something that is seemingly looking like what I would describe as a loudspeaker. So from the forward chart, this is how it looks like. We had the original break last week, market recovered, and now is headed lower. So this idea is now playing out from this level here. And from the short run, I would say we have what looks like a loudspeaker. So I'll try and show it to you guys. So what we have here is a market that is forming something like this. So it's more like an opposite triangle where the big swings are getting bigger and bigger. And now we are yet at another support area. And now it's important to start monitoring this area to see whether gold will be breaking and forming a new low. But then from the forward chart, it's clear that there was a very strong entry by sellers, and there's a potential that the market continues downwards. So big news for the day was the NVIDIA earnings yesterday. They led to resumed or increased optimism in the stock market, which led to a very strong rally since last night. So if you measure the performance of the Nasdaq from yesterday's low to today's current price, then the stock market is up 3.50%. So I expect this momentum to continue and potentially the NVIDIA to hit another all-time high. And the previous high was $18,044 per share. So I expect this momentum to continue and the market to break even higher. So we have already seen it happen with the Dow Jones earlier today. So the Dow Jones was able to touch another all-time high, and we could be seeing this continuing for the better part of the evening. So yes, in the last 2 hours, there was a big reversal, but the market is still pushing higher. And of course, for the US 500 or the S&P 500, the market has already broken the previous high. It's currently trading at an all-time high, and we expect this momentum to continue. So I think the analysis in the morning was correct, and we expect to see further upside potential. So Brent oil started day weak. We had projected that the market would get here, but first the Brent oil prices dropped all the way down and then made a reversal. And what we are seeing is the continuation of bullish momentum. And this is coming amidst the recent news that we just saw of US crude oil inventories. So I'll be trying to share that. So just give me a second. So this is one of the latest news we have seen this evening, and this is natural gas storage, which came in at negative 60, down like 1 billion from the expected negative 59, and the previous one was negative 49, meaning that natural gas storage is getting worse and worse, which is bullish for the price. But then for crude oil, the previous increase was 12.0 million barrels. And now we were expecting to see a 3.9 billion, but what we got is 3.5 million. So when you see crude oil inventories reducing from 12 million to 3.5, then you know that there is more scarcity, and as a result, it tends to be bullish for price. So that may explain why we are seeing a bullish reversal on Brent oil prices. So as we head on to Friday, we'll be looking at retail sales coming in from New Zealand, as well as core retail sales data. There will be a bank holiday in Japan, that is tomorrow. So they will be celebrating what we call the Emperor's birthday, and that means low volatility for JPY pairs. There will be GFK Consumer Confidence Survey for the UK at 3 a.m. Then we see a speech from FOMC member Waller at 3:35 a.m. Then German final GDP at 10 a.m. Later on, we get German IFO business climate. This will be at 12 noon. And the rest of it is low impact news. So we don't expect any major market moving news tomorrow. So it's safe to presume that technical analysis will be the guiding path for trading tomorrow. And of course, the dominant news being the bullishness into the dollar as well as US equity indices. This might be extended tomorrow, and we could be seeing the market continuing with those trends. So besides that, I don't know if there's anything I missed. So just to give you a highlight of NVIDIA's earnings, you can see the numbers here. So the company basically reported an earnings per share of $5.16. And this came in from a revenue of $22.1 billion. So the market was expecting $4.6. So you can see from 4.6 to 5.16. This is a big upbeat. And of course, the revenue was expected at $20.4 billion, and the company reported $22.1 billion. So the earnings were up more than 486%, while the revenue was up 262%. So this shows the stellar performance of the company, and the change here is compared with the same quarter last year. So we are seeing the company taking its earnings almost five times within 1 year. And of course, for revenue, it basically moved over 2 times within the last 1 year. So these are big stellar performance from the company. And of course, for the projections for the quarter, they also went up. So now the company is expecting to make 24 billion sales revenue by the next report. And this is better than the Wall Street's expectations, which were projecting 21.9 billion. So as a result, the company did well, better than expected. And the projections for the current quarter are also higher than what the market is expecting. And as a result, we have seen the stock rally about 15% today, making this big jump all the way back to 776, which is a new all-time high for the company. So now we are seeing different banking or investment bankers changing their price targets for NVIDIA, with Goldman Sachs and Toshiya moving to $875 per share compared to a previous expectation of $800. So with this big jump, now they are confident that the stock will move from 775 and get to 800 and proceed to get to their target of 875. So we are seeing all this happening across board. Vedrati Shota from Jefferies now moving from 610 to 780, and all that happened within 1 day after the company reported stellar earnings. So that's it for the day, and thank you guys for joining the session. So I'll be taking some time to understand if there's any questions you guys have raised, and then address the questions as we approach the end. So hello, Charles Mukua. I can see Owen, Shmi, Gitao, Kenneth, J. Scott, Atua Nation. Hello, Jeff Kibe. Could you explain how big banks manipulate the market? You'd have to be very specific with this one. Which markets exactly? Like, these are literally thousands of assets available in the financial markets. Which one are you basically focused on? Are you asking about Forex, stocks, or so on? What is the symbol for the Dow Jones on the MT5? This is a good question. So the Dow Jones, usually abbreviated as DJIA or GIA, Dow Jones Industrial Average. It's basically listed on the FXPesa platform as US 30. So if you look for US 30 or US Wall Street 30, then you will find it on the FXPesa trading platform. So I'll be addressing one last question from Lamik. Kindly go through a new pair and teach us your top-down analysis in detail. I don't know if I have sufficient time. This session is supposed to end in 30 minutes. So I'll try to do this within a few minutes. Hopefully, I get to answer your question. So I'll try and cover something that I haven't covered before on the presentation, and hopefully everyone gets to grab it. And this is the last question I'm answering today. So let's see what we have here. I have quite a number of charts open. I know there's a out of guys who prefer trading the pound yen. So let's just clean up the chart. We go to a higher time frame, let's say the daily. And just from observing this chart, I would like to just have a perception of where it's headed. So just look at the highest points and then try to connect them. This is like a really simple way. And then you find the lowest points and try to connect them. So I believe there's some form of a support line extending through this way. So it's not very perfect. So I'll try to make it as close as possible. So I believe that basically gives us a direction in the market. So now we know that pound yen currency pair is just following this path, and this is the average direction. And I hope that makes sense to everyone. So now we move to a smaller time frame. In this case, we move to the 4-hour chart and try to understand the most recent price action. So looking at the highs and applying the same concept, if you look at this high, this other sequence of highs, then this is basically what we get. So it's like a market that has been facing a very strong resistance along that area. And now it has recently broken above that trend line. So first point, second, third, the fourth one, and now the market has broken above that. And then that becomes a key point of focus for me. Then if you look at the most recent lows here, I would say that the market has been following a path along here. So on previous accounts, you will notice that the market was moving towards the lower trend line, but once it got to this bottom, it has formed a very strong support that was not broken. And from there, the market has been on an upwards trajectory. So with this in mind, now we zoom in, try to understand the recent price action. So over the past couple of weeks, I would say now ignoring the longer term trend line here, if you use the most short term momentum here, the most recent high here was as this, then you can see that the market is attempting to break towards the upper side. So if you go to the 1-hour chart, this is how it looks like. And now we have a pattern to observe where we can see the average momentum in this market has been following this path. So clearly we know that the bullish momentum is there on the long term as well as on the short term. Then from the 1 hour chart, you can see it's a bullish momentum. So this the last time we had a value area. That is, if you wanted to buy pound yen, this was the best entry after the market bounced off this trend line. And then it crept up higher and higher, eventually made a big jump, pulled back, didn't quite get to the lower trend line, and now it's attempting to move higher. So this basically creates an expectation that the pound yen might be headed higher. And if you go to even higher timeframes, we can't see a price level where the pound yen was trading at that level previously. So now it makes sense to use the previous price action to set a target, and this seems like a likely candidate where this has been the resistance over time. So in this case, if the market breaks that triangle, it's expected to get to this area here, where we could be seeing some form of resistance around 193.87. So in this case, that's what we have, a potential breakout towards the upper side, which could rally to 193.87. So that's it for the day. I hope that answers your question, and I hope to see you on the next session. So tomorrow the session will be held by Samson Mzera. So make sure to listen in. We have a new episode of the Bullish Banter podcast. Check out on your favorite podcast platforms. And of course, for my session, I'll be resuming on Monday at exactly 11 a.m. as we discuss the new week and the potential opportunities for the new week. So thank you very much, guys. Thank you for your time. I hope to see you on the next session. So for Kenneth, if the thing you're discussing is a Forex market, kindly search on YouTube, and I'll try and type these on the comment section. There's a channel called Now Nonsense Forex. So look for a video called Big Bangs. That will be quite informative. So thank you guys, and see you on the next session.